If you've been a stock trader and now you've got a 1099 from the crypto exchange, how does that 1099 DA look different from the 1099s you got from your brokerage firm? Well, typically from a brokerage firm, you're getting what they call a consolidated 1099. What does that mean? It's actually several 1099s in one. You're going to get a 1099B, B for brokerage, which is listing the brokerage transactions, what you bought, what the proceeds were, what the purchase price was, the dates that happened, and the net gain with totals. That's beautiful. And you can report that on your tax return for the brokerage. Also, for a stock trader, you're probably getting a 1099 int for interest, maybe a 1099 OID if you had zero coupon bonds, 1099 div for dividend reporting. All that happens in the stock world. And they basically put it all on what they call a 1099 consolidated so that you can use that to report your taxes. Right now, from the crypto exchanges, we're getting 1099 DAs, and I would say the appearance of them this first year is all very different. Everybody's doing it a little bit different, and it's a bit confusing, in my opinion. And I think what information they report to you is what they're reporting to the IRS, unless they say otherwise. You need to report the 1099 DA on your tax return, even though you may have to make adjustments for it because it's incorrectly reporting assets. Kind of what's different between brokerage and crypto exchanges is with the brokerages, you tend to buy a stock on that brokerage and it lives forever on that brokerage until you sell it. You never move it off the brokerage. So the brokerage has complete knowledge of what you bought it for, what you sold it for, and can give a really accurate 1099B to the IRS and for your own personal tax use. But if you are a type of person who moves your assets off an exchange, that you have private wallets, not your keys, not your coins, then the 1099 DA that's coming from that exchange is going to be not the complete picture. It may not report all the proceeds of your transactions, and the cost basis it reports may frequently be wrong because they have different rules they have to comply with. This first year, for the 2025 tax year, there is no cost basis, but in subsequent years, there will be cost bases that'll be reported to the IRS.